What's up everyone, it's Caddy with Money Vesting. In this video, we are going to be talking about COSTCO, ticker symbol COST, and a lot of you guys have been asking for an update and an analysis on this company, and that's exactly what we're going to do in this video because they are reporting earnings later this week on Thursday, March 2nd, and they are going to be reporting for the second quarter of fiscal year 2023. So in this video, I'll break down everything you need to know about COSTCO prior to the earnings coming out. We'll talk about the revenues, earnings, cash flows, valuations. We'll talk about the intrinsic value and then jump into the TradingView platform to figure out the technical analysis on this stock as well. So hope you guys enjoyed this video and find it helpful. If you do, don't forget to subscribe to the channel and make sure that you drop a like button as well. And the link to our Discord and Patreon is going to be down below if you're interested in joining us, and that 16% annual discount that is available and valid till the end of this month. So you'll get access to all the trade alerts, trade ideas, private videos, and a lot of other benefits as well. So that's going to be the second link down in the description below. So COSTCO here on the day was down on Friday, a little bit close to 1%, trading as low as $488.61. So if you break down some of the facts about COSTCO, I really don't have to go over exactly what the company does. It is kind of in line with one of the largest global retailers alongside Target and Walmart and Amazon, some of those companies. It's a third largest, in fact, with 11th largest in Fortune 500 with a market cap of $232 billion. They've got 845 warehouses worldwide, of course, predominantly located in the United States and Canada. So they are a company that's very much focused on North America, but they've also got locations outside of the US and Canada as well, in parts of Iceland, Sweden, Japan, Korea, China, so in Asia and Europe as well. Now, talking about the members, so COSTCO, to my surprise, has close to 121 million total card holders with 67 million households that they are servicing, and 92.5% is the renewal rate, with $4.3 billion in membership fees. So COSTCO is, in fact, doing really well on the members as well. And when it comes to the numbers, 2022 revenues landed at just over $222 billion, with increasing from $192 billion, and gross margins increased. Actually, they decreased from 11 to 10.48%. With memberships also declining a little bit from 2% to just under 2%, and operating income was $7.8 billion, slight increase year over year, and net income was also a slight increase from $5 billion to over $5.8 billion, with a net income margin at 2.5%. Because if you take into account this $5.8 billion and then divide it by $222 billion, you get a net income margin of just about 2.5%, which is incredibly low. Diluted earnings per share was just over $13 per share. So once again, if you do the math for COSTCO right now, it's sitting at $488 divided by $13.14. It's trading at over 37 times earnings, which definitely is a little bit on the high end when it comes to the valuation for COSTCO. Now, COSTCO is a dividend aristocrat, and what does that mean? That simply means that company has been increasing its dividends for the last almost 20 years, and it's been paying out shareholders every single year. So pretty good dividend yield. $3.60 is what they are paying out annually, and they initiated their dividend back in 2004 at 40 cents per share. And they've been growing that dividend at about 13 cents per share with $1.6 billion payout annually to shareholders. Now, this right here is going to be a little bit about stock repurchases and CapEx. So in the first quarter of 2023, they have bought back close to $142 million worth of shares. In other words, 285,000 shares, with a CapEx sitting at just over $1 billion in the first quarter. Now, 2020 to 2022, they have consistently grown revenues from $166 billion to over $227 billion, grown operating income from $5.4 billion to $7.8 billion, and net income has also ballooned from $4 billion to over $5.8 billion. Not a substantial number though, because the company is doing a lot in revenue, very little in net income because of the lower margins, but nonetheless, they are growing. And diluted earnings per share growing from $9 to over $13 per share. That's also a 30 to 40% growth, which is not bad in 2 years. And the diluted share count has pretty much remained flat, so very, very stable at 444 million shares. Now, when it comes to profitability, grade, and margins, 12% gross margins for the business, 2.5% net income margin as we calculated earlier. And efficiency wise, Costco is okay. Like return on common equity and return on capital is really good in the mid double digits and high teens and 29 to 30%. But return on assets can be improved at just under 9%. It can certainly get a lot better moving forward. This right here is going to be their balance sheet. So as of August 28th, 2022, Costco is sitting in just about $11 billion in cash and short-term investments and other long-term assets. They've got $4 billion. And when it comes to long-term debt, they are sitting on a little bit over $6.4 billion and current portion of long-term debt, very, very small amount at $73 million. So all in all, the company's got more cash than debt on the balance sheet. They've also got more current assets at $32.7 billion versus $32 billion in current liabilities. So current ratio is also positive. Barely though, but it's still positive over 1. And total assets also do exceed their total liabilities with little to no goodwill to be found on their balance sheet as well. So very good assets versus liabilities. This right here is going to be their cash flow statement. So a little bit of a decline there in operating cash flow. So it declined from $9 billion to just under $7.4 billion. And if you take into account the $3.9 billion they spent on additions to property, plant, equipment, their capital expenditures, we subtract that number to get the free cash flow, which was sitting at just a little bit over $3 billion for the company, which is a bit of a decline from same time last year when their free cash flow was sitting at just about over $4.5 billion in 2021. Now, this right here are going to be all the numbers that we just went over summarized in a nice table. And we also are looking at the compounded annual growth rate as well as the total growth from 2013 to 2022 for Costco. So for example, revenue back in 2013 was $105 billion. They've been able to grow that number to $226 billion. That's a compounded annual growth rate of just under 9% and a total growth of 115%. Gross profit similarly has gone from $13 billion to over $27 billion. That's 108%. In other words, they've just more than doubled their gross profit in the last 9 years, and that's a compounded annual growth rate of 8.5%. Net income has gone from $2 billion to $5.8 billion. That's a 12.4% increase in net income and 186% total. And EBITDA has gone from just under $4 billion to almost $10 billion, about 10.3%, 142%. And diluted earnings per share has gone from $4.63 to over $13 per share. And that's a growth of over 12.29%. We have to remember this number because we are going to be looking at some of these estimates to kind of project out our own net income forecast for Costco to kind of figure out what that intrinsic value is going to be. So remember these numbers. That's exactly why we're calculating them right now. And diluted shares has gone from 441 million to 445 million. So not really a lot of dilution, only about 1% in the last 9 years. That's how fantastic the company is in terms of share buybacks, and only a small increase of 0.11% over the last 9 years on an annual basis. And free cash flow from just under $1 billion to over $2.2 billion. That's a 10% compounded annual growth rate with about 140% growth rate in total. Now, in terms of valuation, as I briefly went over earlier, Costco's valuation is high. They are trading at over 36, 34 times earnings, which if you compare them to the sector median at around 19 to 20, it's definitely trading at a premium. And Costco historically has also traded at a premium because their 5-year average has been around 35, 37. So they're very much in line with their 5-year average valuation, but it's also at a premium to the entire sector. And in my opinion, just given the growth rates, I mean, take a look at the PEG ratio, right? Forward PEG ratio is just under 3. That's really, really unfavorable, at least in my opinion. And when it comes to enterprise value to EBITDA, 20 to 22. We've got price to cash flow trading at over 32, almost at 33 levels. So these are pretty expensive valuations, in my opinion. Costco, fantastic value company, fantastic dividend company. Can it be considered as a growth stock? Not really. I mean, diluted earnings per share has grown over 12% over the last 9 years. So maybe there's a component of growth a little bit. But I think it's mostly a value stock, but it's trading like a growth stock. It's definitely demanding valuations, at a premium. It's trading like a growth stock in my opinion. Now, when it comes to the forward expected earnings growth, they are expected to grow earnings from $14.35 all the way up to $35 by 2032. And by 2028, earnings sitting at over $23 per share. So once we plug those numbers into our analysis, into our calculator, what we get is a forward expected growth rate of just over 10% for Costco for earnings, right? So in other words, they're going to be expected to grow earnings per share at just over 10% over the next 5 to 9 years moving forward, right? So historically, they've grown that number by 12%. And for the next 5 to 10 years, they're going to be expected to grow this number by about 10.5%, which I think is very reasonable. And we can pretty much use this number to calculate what the actual intrinsic value might be for Costco. So for example, if we plug in 10% for the growth rate in net income, and the PE multiple sitting at we're going to come back to the PE multiple right now. The discount rate is actually going to be a little bit less than 12%. Let me just quickly take a look at what their dividend yield is. So they are sitting at 0.74% in dividend yield. So we can kind of keep that intact at 12%. I think 12% is pretty reasonable. 10% margin of safety. And we're going to go with 0.11% in share dilution, which is what we calculated using our table. And now when it comes to the PE multiple, right? I'm not going to go with 35. I'm not going to go with 30. I'm not even going to go with 25. I'm actually going to go with 20 times earnings for Costco. That's going to keep that PEG ratio at 2, which at least in my opinion is still a little bit on the high end. But let's just try with 20 P multiple first. We get a fair value of $235 per share. With the market price sitting at $488, you can already see how much downside is needed for Costco to be fairly valued. In other words, to be trading at its intrinsic value based on 2023 net income and the projected growth of over 10%. Now, this right here is going to be that sensitivity grid. And you can take a look at different P multiples, different growth rates. And right now, as it stands, since Costco is trading at $488, which is going to be closer to around here, so I'm going to highlight those numbers right here. It's going to be pretty much at the bottom right of this entire sensitivity grid. It is trading at a very high multiple at 30 to 35 times. And the expected earnings growth from the market is also at over 16 to 18% off of Costco, which I think is definitely being very over optimistic with this company. I mean, can Costco grow earnings by 18% over the next 5 years? It's possible, but how probable is this outcome? I don't think it's that probable. I think 10% is far more reasonable. But to double that number or to increase that growth rate by 80% and make it go 18%, I think it's a little bit on the high end, but that's just me, right? So for me personally, I think Costco deserves a much lower PE multiple. I think 35 to 30 times is very, very high. But let me know down in the comment section below, what do you think about this company? Where would you put Costco when it comes to the intrinsic value, when it comes to the PE multiple? And this right here is going to be the technical analysis. So what we are seeing right now is a lot of symmetrical consolidation between Costco's, between the buyers and the sellers. So we are seeing a big rejection at the lower highs over here and a lot of buyers stepping in at the higher lows over here. And we've also got this higher low sitting right over here. So lots of demand at around $450 per share. So that's a big support level. So that's going to be inside this green rectangle. So every time we've come down at that level for Costco, we've seen some buyers stepping in. And there is a big resistance for Costco sitting roughly at $579, $580 per share as well. So that right there is lots of consolidation. Support level is going to stay put at $440. But for me, obviously $250, $260 in and around those levels is going to be where I would be interested at that stock, because our flexibility range, so plus minus 5%, we're going to be looking at least at the minimum 247 for Costco in terms of our intrinsic value moving forward. So in terms of what they are expected to announce, their EPS at $3.20 with the revenues of sitting at just over $55 billion for the second quarter of fiscal year 23. But let me know what your thoughts are on this company. I think, given how slow the earnings growth is moving forward, or even historically and over the next 5-10 years forecasted, I think a much better P multiple would be closer to 20. At the most, I could see it get up to as high as 25. But 32, 35, definitely on the high end for premiums for the valuation. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel, and the link to our Discord and Patreon is going to be down below if you're interested in joining us. As always, happy investing, and I'll see you all in the next video.